Good morning, everyone. Good morning, good morning, good morning.
Morning, Luca. Morning, everyone.
Okay, Jaya, if you don't mind, I've made you co-host. Thank you very much.
Good morning, Luca.
Good morning, everybody.
Okay, we're already live on YouTube. So good morning, everyone, and welcome to another episode of the Crypto Hour. So last week we were talking about the debt ceiling. So that as expected, has come to pass and is being approved as we speak. There isn't major panic that would have been possible if a new debt ceiling had been agreed. So what we can look at now today, because we see that kind of like there isn't a great great move in the markets as a result of it. I mean, yes, the stock market has moved higher, but mostly because we are in earnings season rather than a huge move because of the debt ceiling approval. But let's see what it looks, what it means for the next few months. So now that it has been approved, what's the next step? So what will have the US government have to do to restore its position, and what will that mean? Okay, so let me start by sharing my screen. Okay. Okay, can you see my screen? Can you see the Forex Factory calendar? Yeah, okay. Okay, this is the calendar for the week. It wasn't kind of like particularly heavy, but there are a few things to notice. We in Australia we see the kind of like inflation numbers still climbing. So in a way, putting more pressure on the Australian central banks to raise interest rates again. Inflation numbers. This is the German CPI, so Consumer Price Index. We keep seeing the effect of the monetary policy tightening. So the inflation is coming down, which is kind of like, I mean, it's funny to see in red, because from the point of view of the currency, it's seen as a negative because it kind of like it dampens expectation of future rate rises. But it's a positive thing that the kind of like inflation is kind of like going towards more manageable levels. Let's have a look. We had kind of like a good numbers for the US. They still at the moment is showing kind of a buoyant job market, with the job openings above expectation. That was on Wednesday. We had more figures for inflations in Europe, as you can see, going from previously 7% to 6.1%. So again, showing that the inflation is, at least obviously Europe is many countries put together, so there are different figures in different countries, but generally speaking, the average is going in the right direction. Now, and then we had kind of like unemployment claims in the US yesterday, coming slightly below expectation, although it's a rise from just a tick higher from the last month. And today we have kind of like a couple of big announcements. So if you are, if you actually do play the markets, if you trade in any way, be very careful around 1 p.m. this is UK time, so it's like 8:30 a.m. in New York, which is an hour before the market open. Okay, So do expect huge swings and a big increase in volatility around that time. So if you trade anything that is priced in US dollar, even if it's not directly US dollar, so whatever is priced in US dollar, that could be oil, that could be gold, silver, it could be stocks, it could be currencies. Okay, but anything could be cryptocurrencies as well if you are trading against the US dollar or the a US dollar stable coin. Okay, so be very careful. Rather have your be well protected with your stops. If you have a big margin, that's fine. But if you have a small margin, then consider removing all your positions before the announcement, and then wait for half an hour after, and then do whatever you need to do. Okay, but be careful around that time. So that it's roughly in about 5 hours time from now. Okay, so what I want to concentrate on today is really the meaning of kind of the effect of this, the debt ceiling deal on a major component of what moves the markets, which is liquidity. And let me just go on to. Okay, so, oops, sorry. So let's have a look. Let's do something really exciting. So let's do some accounting. Okay, so what is going to happen right now after the deal is that as I was talking to you last week, I was saying that the government has basically spent all the Treasury general account because they ran out of pretty much ran out of money. So imagine that you can't borrow on your credit card anymore. Just put it on a personal level. You can't borrow on your credit card anymore. You have some kind of like emergency cash stashed away somewhere, in case in cases like this, and you use pretty much all your emergency cash. Now your credit situation is all of a sudden improves, so you have to restore these reserves. Okay, let's have a look how that works in practice. So generally speaking, when the government wants to spend, like deficit spending, so they want to spend money that they don't have, they just spend the money. Okay, and that produces more equity for households, because the money, obviously they spend the money in the market, and so that money goes in somebody's pocket. Okay, obviously in small parts. So what you do with these new funds, you can deposit them in the bank. So they are kind of like liabilities on one side, and there are assets on the other. So you have then bank deposits, and this deposit goes into the bank. So they are at the same time an asset and a liability for a bank. Okay, because they owe the money to you, but at the same time it makes it's part of their reserves. Then the government actually they can't just spend money that they don't have, because that's not allowed. So they have to issue bonds. These bonds are bought from the banks with your money. Okay, so the effect of of deficit spending we're going to look a little bit more in depth in this, but generally speaking, so the effect of deficit spending is to basically drain kind of bank reserves. Okay, because it kind of like the banks then use their reserves to buy to buy these bonds. Okay, so it depends on how this is managed. Not necessarily, as I say, not necessarily there is a reduction in banks reserves, and we see, like in this case here, the banks get your deposit from one side, and they they invest in bonds on the other, and these bonds then are still part of the reserves. Now, this is when the government actually issues these bonds to spend the money in the markets. What about if the banks actually issue bonds to just replenish the Treasury General account? So they issue these bonds. So I made a mistake, sorry, before when I was telling you. So in the first case, let's go back one step. So in this case, when the government spends money in the economy, this doesn't drain reserves. Okay, so it has really no impact on liquidity. But when they have to replenish the Treasury General account, so what do? They don't do any deficit spending. They just issue bonds. These bonds are bought by banks, okay, which obviously now have got less reserved and got so the short reserves and long bonds. So this on the other side, instead of kind of like the on the other side of the equation, because this is a liability for the government, on the other side of the equation they have the Treasury General account, and these reserves from the bank, as you can see, they at the same time sit on the liability for the side for the Fed. They got now less reserves, and that money is in the Treasury General account. So really, the bank is issuing bonds. Sorry, the government is issuing bonds not for spending, which wouldn't have any effect on liquidity, or basically on bank reserves. But in this case, they keep the money themselves. Okay, and so the effect is that so basically the Fed takes money back takes cash away from the bank and gives them bonds. Okay, so in this case, the bank reserves are less. So why would that make any difference to the economy? Okay, because for a simple reason. Okay, the bank, although the kind of like reserves, a lot of the reserves is not their own money, is the depositors' money. They use these reserves to then invest, to lend out, to invest, and the more reserves they are, the more they can invest in. Obviously, they always invest some of the reserves into safe assets like bonds, etc. But also they would then lend out to a variety of risk, and the more reserves they have, the more they can lend out to riskier enterprises. Okay, so when the banks have lots of reserves, they can be a bit more enterprising and lend out more to higher risk companies and enterprises, where when they have got less reserves, they become more conservative. Okay, so they are a lot more careful with their lending because they have less to go around. So they want to make sure that what they have, it's safer because they have less funds to go around. Now, let's see. This is not necessarily what is going to happen. This is where it becomes, we are kind of like in a gray area, because banks have got direct access to the Fed, but there are many other providers, which are the kind of the money market funds, kind of pension funds, money market funds, hedge funds, and so on. They don't have that direct access to the Fed. So the way that these bonds issuing would be actually bought by the MMF, so the money market funds, would have an impact on the kind of direct involvement that the banks need to have. So the more funds, the more bonds, the more of this new issuance is bought by the market as such, rather than by the banks, the less impact will have on liquidity. Okay, so in this case, so this is the case where, I say, all the issuance is bought by the market, and that will have basically no effect on the liquidity. Okay, so there's no drain of bank reserves at all, and so no difference on liquidity. Now, will the I will say, is there a direct link between let's say liquidity and the performance of the markets? I mean, there is no direct link at all for one country's liquidity. Like, even if it's as big as the US, and any kind of statistical analysis that you can try, show that there is a very small correlation between the amount of liquidity and the price in the in the stock markets. But obviously, the global liquidity does have an effect on the market, by definitely, because again, anything that asks for investment draws from the same pool. So whether it's companies going to the market to ask for capital, or issuing bonds, or governments, this money has to come from somewhere. Okay, so the things that are important to note is that there is a monetary tightening going on in the US, in Europe, in the UK, which are probably the three largest markets apart from China. And on top of that, the other big player is Japan. Okay, Japan at the moment is still in quantity easing, although that easing is getting smaller and smaller, and it is thought that towards the end of the year they actually will have to start tightening again. Okay, so the reality is that there is a global quantitative tightening going on at the moment, and this is what really the effect on this kind of global liquidity index and the S&P 500 returns. So generally, the S&P 500 returns lag by about 6 months. Okay, the reduction of the liquidity. So it just, I mean, it's not magic bullet or something that will tell you exactly what you need to do right now, but strictly speaking, what we have seen in the past 6 months is a growth of markets, but it's not being borne by, not being, let's say, confirmed by numbers in the economy. So what we kind of like are expecting right now is we're still in a period where we kind of decelerating growth, and that is probably going to still be there for the rest of this year, pretty much. So really, we are kind of like pinballing between the two quadrants here on the left, depending on if we have got more easing or more tightening. And it looks like we are kind of, there have been noises, kind of like the market trying to move to the top quadrant in the first half of the year, and we've had kind of like growth in, especially technology, we've seen recently in technology stocks. But the numbers in the economy shows that we still are going to experience a slowdown, and so we're probably going to see what we're going to see in the second part of the year. We'll see a slow deterioration of the job market, and while the US figures they're coming through in the US still show the inflation going kind of dropping quite rapidly, and at the moment the job market is still quite buoyant, but it is expected to start slowing down now for the second part of the year. As for Europe and the UK, it is seen that again, probably some more tightening would be needed to bring inflation back to below 5%. I mean, I remember everyone that the UK is still hovering around 10% in terms of kind of like inflation figures. Okay, so bear in mind that this is until we can see, I'd say, a move in growth, and this is where we start actually being interested in kind of like going long, so to speak, in a lot of different asset classes. At the moment, it's kind of really pretty much kind of like protective. If you're looking after your assets, will be more in a protective way rather than trying to be expansive. So and this is, in a way, it's kind of like it's the quandary for the markets of there is an easy riskless, pretty much 5% available to investors right now, and so before you make a decision to go from parking your money in short-term bonds that give you 5% plus and decided to put it into something riskier, stocks, crypto, whatever it is, futures, before you start doing that, you need to see some signs that there is going to be more demand for those kind of assets. Okay, and this comes from kind of from growth actually picking up and start accelerating. Okay, so at the moment, kind of 5% risk-free interest looks actually pretty good, and kind of like I personally don't see this the right time for start being extravagant with your portfolio. Okay, so let's go back to, let's start talking a little bit for a change about some crypto. Okay, let me go here for now and let's have a look. From the point of view of prices, they're nothing really too exciting. Okay, so we are still, let me go onto the higher time frame. So let me just get rid of these session breaks. Okay. So you can see we're still pretty much where we were last week. This was the beginning of last month, so Monday, 22nd of May. So we're still pretty much not much further than that. So the last couple of days we're seeing kind of like a kind of a really tepid try to move a little bit higher, but we're still around the 27,000 mark. So the market is still deciding if he kind of wants to have a go at this upper range, which was the one, again, I remind you, from May, June of last year, or if kind of go back and feel comfortable in that range that we've been into since beginning of the 2023 up to the end of March. Okay, so you could, if you want, just say consider it as a large range between 20 and 30,000, really where the market has been in this year. Okay, so nothing new, because, as I say, this, although it's an exciting prospect, crypto is still it's still part of the general economy, and if the economy is going sideways, so to speak, so would most of the asset classes. Okay, and crypto is no difference. But let's go and have a look at some specific crypto news, and these are some of the problems why also that slows down crypto adoption. So we have kind of like in May, we still had quite a few rug pulls. These are kind of like basically projects that launch where the owners or the venture capitalists that own most of the tokens all of a sudden remove the liquidity. So basically you have all these tokens that all of a sudden become worthless. Okay, so we've had increasing rug pulls in May, but on the good side, the kind of DeFi exploits have kind of decreased, and they keep decreasing maybe 80% from April. So they've been kind of slowly decreasing since March, which is kind of like a positive thing. But one thing to make everybody aware of is be very careful about using public charging devices for mobile phones. Okay, so the kind of things that you find in airports, for example, or shopping centers, because now potentially they could be modified to make you upload malicious programs to your phone that could compromise private keys if you have your wallet on your phone. This is another reason why, for example, I don't have the crypto wallet, my crypto wallet on my phone, because it is an extra risk. And unfortunately, you need to use your phone, obviously, in a lot of ways, and sometimes this is not the safest place. Although they might, want you to think that's the best place to keep your credit card, so you can tap your phone instead of using card and so on. But be careful. Okay, so be aware of security whenever you use your phone, especially if a lot of the kind of access to your banking, to your crypto wallets and so on are on your phone. I in particular, I don't know how many of you do this, but if your bank access code and your bank password, I don't store them electronically anywhere for that reason. So they are obviously in my head, and every time I need to use them, I actually use them from there, but without storing them, not even on a password manager. So so this is me and the way that kind of I try to keep myself safe, because there have been quite a few cases in London, in particular where I live, of people being mugged on the street, and because they have got the balance account or the crypto wallet on their phone, these thieves basically open your phone, transfer everything out, and in minutes you have lost everything that you had in cryptos, for example, that you had access to from your phone. Okay, then go and try and get it back. It's not an easy thing. Okay, on a more positive note, we had kind of like good news from USDT Tether. They has now gone back to levels that they had before the Luna debacle last year. So it's now the amount of Tether available on the market now is an all-time high. And this in particular talks about a cooperation with Yellow Card, which is it's one of the leading fintech and crypto exchanges in Africa, to expand the use of the crypto, the adoption of USDT, through the Yellow Card, even to help people transact in countries with the with a weak currency. So it's kind of like a quite the crypto adoption in Africa is increasing by kind of like 1,200% in the past 2 years. So it is, as I was saying to you before, this is growing very rapidly in places where it is not a fancy thing that you do, fancy investment that you do, but where this technology is actually needed. Okay, so to have fast and secure payment, across borders, and in ways that are kind of like got very limited cost. Okay, because it's a problem. The micropayments problem all over Africa has been a big issue. And I remind you that the traditional solutions, are likely to cost, in the region of 10%. So something like cryptocurrency payments are a fraction of that, and could really end up releasing a lot of a lot of funds where it really matters. One thing to notice is that now where USDT was mainly on Ethereum, because obviously E was born as an Ethereum token, now is only only about 33 billion of its 83 billion are now on Ethereum, where now the biggest player in the USDT market is Tron. Okay, the Tron blockchain, which is quite surprising in a way. But because Tron at the beginning was like kind of like put down as a sort of a joke, as a chain, but it has now grown in terms of speed of transaction, and it is used as one of the favorite payment blockchains. And this is borne by the kind of the amount of tether that's present on Tron blockchain, even higher, about 30% higher than on Ethereum. Moving on, there's a kind of like problems never come alone, but they come in threes and fours. Now there is I don't know if you've ever heard of multi-chain, but you might have used this if you transfer funds between one chain and another. It is mainly a blockchain bridge to move funds across blockchain. Now there is the CEO is missing, and this is kind of like causing a little bit of panic, because the bridge actually holds 1.5 billion in assets across dozens of networks. Now, why does it hold these assets? It's because often this is how a bridge works, and often it is where the coins are deposited in one blockchain with the bridge, and they are kind of minted on another blockchain. Okay, so the thing is that if the funds that are deposited are not redeemable, that will make the funds on the other blockchain, so the ones that have been minted, also worthless. Okay, and so this is sometimes what has happened with the previous bridge hacks. Like, for example, what happened on the Harmony blockchain last year, where funds were stolen from the bridge. So that means that all the tokens that were then being transferred, like the Bitcoin and the BNB and the kind of Ethereum, they have been locked in the bridge and then recreated as Harmony equivalent tokens, became pretty much kind of like worthless overnight. Okay, and this is, at the moment, we're not at that stage yet, but obviously it is concerning, because there are rumors that he's been arrested in China, and kind of like it is kind of like ironic and say that although this is supposed to be a kind of a decentralized service, but this is actually a multi-chain, which is a service that came up to connect different decentralized services, has actually got one point of failure. So so there is kind of like it doesn't look like at the moment, say they haven't replied to comments, so it is not quite clear if multi-chain has a redundancy system, so in case the CEO is not available, and so we will see this what happens with this thing. But this could be a reason as well. There is kind of like another mini downturn in the crypto market, because still it is 1.5 billions. I mean, although they're not huge, but we still it still mean that these are funds that some projects rely on, and so could cause problems that people holding those funds. Okay, so the other reason that's holding back many people from crypto is at the moment the security aspect. So the reason that DeFi projects keep getting hacked, makes many people worried about using DeFi instead of the traditional banking system. And also the fact that we're still at the very infancies of DeFi in a way. So the user experience is not the best. It's still quite complicated, especially if you have tried, especially if you are decentralized and want to move funds, between one blockchain and another blockchain. Is not the easiest of things. And that is still keeping people away. So as I said to you a few months ago, this is what we've seen. What we probably see now in the next 12 months is a lot more projects that come on board that come to, they focus on usability. Go the same way as it is. People are now comfortable using something like Cash App and kind of the payments like PayPal and so on. We need to get to that level of ease of use before people start using in really strong, in really high numbers. But this is just wanted to make it make it clear to you. Now, having said that, look what the news brings us. The U.S. Consumer Protection Agencies issues a warning on payment apps, okay, following collapses of crypto firms and banks. So they're using these kind of like spread FUD in a way to stop people using these apps, because this is directly impacting. Who is it impacting, do you think? It's impacting the banking sector, because if people use Cash App, Venmo, or all these apps, and especially if there are kind of like true integrations with the apps, the buyer can completely avoid going through the banking system for making their payments. But people can use their balances on these apps to pay directly for goods in the shops when these things are properly being integrated. And now, the banks are not part of the loop anymore, so they are losing a big chunk of their income. And so they, again, this is what the US has been trying to do, for the whole of 2023. They're trying to kind of like helping the banking sector not to collapse. Okay, so they are blaming kind of like things like Silvergate Bank, Signature Bank, Silicon Valley Bank on crypto, even where they were kind of like completely complicit and often being the cause of, especially of the demise of Signature Bank. It's I see personally this kind of news are completely trying to scare people off and saying to people, look, we got in banking, we got the Federal Deposit Insurance Corporation, so if your funds are protected up to $250,000. Yeah, but what they don't tell you though is that every time you use your card for anything, at 2% of that roughly goes to somebody else, even if you don't pay yourself, but the shopkeeper will pay. So part of whenever you go and buy something in a shop, it's 2% of the transaction goes away to something that doesn't do anything. Okay, so imagine if you repeat the same transaction 50 times, what happens is that who gets benefit out of that is just kind of like the banking sector. So this is why these kind of things are coming out, is because the banks are scared. There's no doubt about it. And they're seeing now that there are other solutions appearing. Not necessarily, the payment apps are not necessarily crypto. So they just, like, if you think about PayPal, think about Cash App and so on, but they got crypto solutions as well, but they're not crypto in particular. But still outside of the banking system, and it's a threat to the old system. So on talking about general Bitcoin and Ethereum and the crypto market in general, money invested in terms of assets under management has actually decreased in in May, both in Ethereum and Bitcoin. So we're seeing this reflected then when you go back and look at the prices. This is, where are we in May? So pretty much this is May. Okay, and we can see that this is where we started. This is where we are right now. So nothing much really happened in May. A whole lot of sideways move, a little bit up, a little bit down, and we're going back now to the to where we started from. So so where are we? Sorry. Okay, so this is where we were. Okay. Other pieces of the puzzles. This is kind of like a Voltage, which is a Lightning as a service provider. It's now part of the Google Cloud to expand hosting across the world. Okay, so again, it's this. Take this article with a pinch of salt because it comes from the Bitcoin magazine. So they obviously are kind of like they talk up anything related to Bitcoin, but the fact that the Lightning network, which is part of Bitcoin, can be used to make microtransactions at very little, on almost like no cost. It's something that will be very useful especially to do small transactions. Okay, so if you, at the moment, it hasn't been practical to pay with crypto in most places for small transactions, because it kind of like it's slow and it's costly and so on. But with this, I mean, this brings kind of low cost solutions that could be used to buy. You could use now Bitcoin Lightning to buy a coffee, with the same way as you can use your card. So again, anything that improves the adoption of cryptocurrencies, whatever those cryptocurrencies are, whether Bitcoin, Cardano, XRP, or whatever you want it to be, it's a positive news, because it brings more users on board. Now, this is, let me just bring you the actual page. This is the reason why kind of like adoption of cryptocurrencies is popular in certain countries. So who do you think the top users of cryptocurrencies are in the world? You go here and you look at the top, the top 5 or 6, and they're all kind of like large users of cryptocurrencies. And if you understand why, because if your currency is losing 100% a year in inflation, these are kind of like inflation figures, by the way, annual inflation figures. Okay, so if you go from the UK, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. So there are 11 countries with inflation of above 10%. And although kind of like this is kind of the UK, Sweden, Europe, it's fine. We've been at that level and they're controlling inflation. There are other countries where that is not as easy. Look at Argentina, look at Lebanon, look at Iran and Turkey. With this kind of high inflation, as a user of that currency, you don't really want to keep it in your bank doing nothing, because that will mean that every year your deposits in the bank lose more than half their value, like 55% to be precise, because it's kind of like 110% inflation. That means that whatever you own right now at the end of the year will be worth kind of a 45%. So you have $1,000, a year's time you go for 115, at least purchasing power. Okay, so this is the reason why cryptocurrency is spreading very, very quickly in South America, in countries like Argentina, like Venezuela. Even Colombia is now kind of like a heavy user of crypto, although the inflation figures are not that bad compared to other South American countries. But you see why, where you need to have a different method of payment in countries like this, because it just doesn't make sense to hold those currencies in your pocket. Now, this is the commodities agency, the US commodities agencies. They are now proposing kind of like a change in its rules for risk management to then allow for kind of the higher volatility, in particular related to crypto, and the risks that providers will have in holding customer digital assets. So this is, in a way, it's good, because we've seen that whenever there is regulation and clear guidance, then crypto actually thrives. So we've seen lately, since we had the crypto regulation in Europe, we've seen a major interest in companies moving to Europe, moving at least a head office to Europe, because they know where they stand. Okay, so having rules and moving from the SEC to the US commodities agencies, it's a good step if that happens. Okay, another couple of things, and then we'll go to a question answers. Now Ethereum now is at record lows on centralized exchanges. It doesn't mean anything in particular for the price of crypto. Generally speaking, it means that people now prefer holding Ethereum on a decentralized solution, so kind of like on their own wallet. But at the same time, generally speaking, when we see an influx of a particular coin on centralized exchanges, is because people want to sell it. So if they are withdrawing from the currencies, it speaks of holding for longer. Okay, so it is a kind of like a good metric long term if more people hold their coins away from exchanges. A couple more things. We were talking about Tron before. Tron has set a new record with 11 million transactions in a day, and is emerging as one of the favorite kind of like fast payment network. So it's not just it's quite obvious that they're better than Ethereum, because everybody is, because Ethereum is expensive. Also, leapfrogging other networks like the BNB network, for example, the Binance Smart Chain, and other networks that concentrate on payments like Avalanche Phantom and so on. And the last one, obviously, we couldn't finish this without talking of Cardano. Now, this is a Cardano wallet called Lace. Okay, it's a new product that's been developed by the Cardano, one of the Cardano founding companies, which is the Input Output, which is the company of the Charles Hoskinson, which is the CEO. Which is one of the founders of Cardano, and also one of the founders of Ethereum. Now they have produced this Lace wallet, but just to show you how these things are done often on the Cardano platform, is that now they have completely made it open source, so it can be, everybody has access to the code for this wallet, and that would in time increase the security, and also kind of like the friendliness of being able to use it, because that nobody in particular is actually benefiting from this particular wallet, but it is a community wallet that is kind of looking to introduce the highest level of security, and that when used in combination, obviously, with the Cardano blockchain, it kind of improves the situation for everybody. Okay, so when we're talking about the DeFi and the scams and the the DeFi apps that got hacked this year. I mean, this is my belief, is that the Cardano blockchain will offer a completely increased level of security that would with time, obviously these things take time, but with time will bring a very healthy and very thriving DeFi sector to the Cardano community, because there's a difference between having something that a few enthusiasts and pioneers can use and having a product that can be used by the masses with the security, kind of a bank level security connected to it. Okay, and this is what we are talking about right here. The fact that this is not in kind of like the code is not owned by anybody in particular is also very important in light of what we discussed last week with the ledger update. So it looks like, if you have a ledger wallet, and I've got a couple of those for myself, it looks like you are not the only one holding the private keys, because they've come out and said that if the government came and asked them for the private keys for the wallet, they would have to provide them. I'm thinking, well, wait a minute, I thought that nobody had access to the private key apart from myself, and now it looks like that potentially the ledger could have access themselves to the private keys. So it's very important. If we're talking about decentralized wallet and security, it is very important that we are absolutely 100% clear about who has access to what, because this is one of the main reasons that people go into cryptocurrencies, and giving somebody like a backdoor to your assets is a no-no, really, for a solution that should give you ultimate control over your funds. Okay, so this ends the kind of review for today, and let's see if there are any questions. Well, this is okay. Okay.
I do. I have a question.
Kim, go ahead.
Are you saying with having the open source on Cardano, the code and it not being owned by one person or one group, you're saying, does that provide more level of security, as you're saying?
Yeah, definitely, because everybody can look at the code. That you can't hide anywhere. You can't hide a backdoor anywhere, because everybody's got access to the code. It's the same way as Bitcoin works. So it's the thing. You can't unilaterally change something when it's owned by everybody. But it is not quite clear at the moment if Ledger has access to these keys or not. But obviously, what they came out with is worrying. So we need a little bit more clarity, in this. So it makes me slightly unhappy to hear something like this, because at the end of the day, where there is Ledger that owns the project, or Consensus that owns kind of the MetaMask software, these are things that make your life easier, the same way that the central exchanges make your life easier. It doesn't mean that you're in total control, and this is the big question. This is a big question.
So if you don't have Ledger, what are the other options then, really, to ask, like, is, because I understand that was kind of the thing that's been touted as a way for storing stuff that's really good. So it's like, well, what's your other possibilities, out there?
Well, there's many different wallets, and that's kind of like, for you, this is what we're talking about, due diligence and finding out things. So there's many wallets available. There's many even cold wallets available. And I think this kind of like raises the game a little bit, because you're thinking, if making people think, because we all, it was almost like a given that if you had a cold wallet, nobody could get to your funds. And now I'm thinking, it's just like many people are questioning that. Is it true or not? And definitely, so apart from the cold storage wallet, there are many software kind of like hot wallets. You know, like MetaMask, for example, you know, like Trust Wallet, like other projects like your Exodus and so on. So finding out the ones that are completely decentralized and that cannot be tampered with at the moment is kind of like on the high list of my priorities. I don't know, Jonathan, what do you think of this?
Hi everyone. Yeah, it's pretty crushing news, really. The most high-profile open source hardware wallet with open source firmware is Trezor, and that's always been open source. So another, you know, high-profile brand. It's high profile as Ledger, really, but they have had open source from the beginning. And this is, you know, exactly what Luca's saying about open source, is that if you've released your source code, then there's nowhere to hide. So we know exactly whether the hardware, the private keys are stored on Trezor or not, because they've got open source software. Ledger has always kept their source closed, which is kind of the approach traditionally that like Microsoft, for example, has kept a lot of its security software closed source, because they think that obscurity is a better approach to security. So you hide what you're doing, no one can come and guess what you're doing to get into it. But it just means that it forces people to brute force attack things. So you end up with password crackers. You just run loads of iterations of the password. You end up with password databases being passed around criminal networks all the way to get in. And so, you know, far better approach is to open source your code, let the community evaluate your security measures. And if they find a vulnerability, chances are with open source that a vulnerability will be announced and worked on by the community before it's reached the point of being in in hack databases and things like that. So the patches come very quickly, and you know that's why the largest open source project is Linux, and that's why it's used as the operating system on all your like internet routers and banking machines and phone systems, is because it's open source. Everyone knows the source code, everyone patches the source code when they find a vulnerability, and move on. So it's not just the responsibility of one company, it's the responsibility of everybody who uses that, and that's the approach to take, really. So yeah, Trezor seems to be the best at the moment. I think there are others out there. I haven't done an extensive look since Ledger's announcement, but yeah, so far, Trezor's one good one to look at. I think Engrave might be as well, and that's a very good one. And again, these are kind of expensive devices. You want to be assured that your keys are secure. You know, do what they say on the tin. Yeah.
Eric, Lace is a different thing though. Lace is it's a light wallet, and it's a hot wallet. So it's not a cold wallet. Okay. So it means it's a software wallet on your computer. So I always said one of the solutions, if you don't want to have a kind of like a cold wallet, it's also to have a dedicated computer that you just use for crypto. So if you have a computer that is turned off, is not connected to the internet, at that moment it's safe. So you only connect it when you want to make transaction, and that's pretty much will be the same as as having a cold wallet. Not quite the same, because it means that when you're online, it's not as secure a cold wallet, because it doesn't require you to input an extra password, but it goes as close as it comes. But this is what Lace is. It's kind of like it's a light wallet like MetaMask, like for example on Cardano, Eternal, or all the other light wallets that there are. So
I was just thinking, I have a Ledger, and now what we learn, or what we know at the moment, that's what I was asking, is Lace at the moment, with our knowledge, kind of more secure than Ledger. That was my idea, my question.
Well, this is why kind of like it would be important to get some confirmation from Ledger, but Lace is a Cardano wallet, so it will not do all the things that your ledger will do. So it can do a lot of those things, but obviously, if you kind of like need to transact Bitcoin or to transact Ethereum and something like that, is not going to be possible at the moment, I don't think, from Lace. Because I think, Jonathan, tell me if I'm wrong, but I think Lace will be at the moment, is a single blockchain wallet, isn't it? It's not multi blockchain.
Yes, it's just Cardano network, but
Yeah.
there are there are tools like chain bridges that are coming along, so you can actually make transactions and exchange, but you can actually buy Ethereum and Bitcoin on Cardano now through the bridging mechanisms. I forgot what it's called at the moment. But yeah, there's a new one out, just Bluefinity or something. But yeah, they've reached mainnet now, so there are mechanisms out there. Software wallet versus.
I'm thinking about actually. I don't know if those can be used to make transactions. So you can connect to things like Web3 projects like you know MetaMask. So
Thank you.
So yeah, not at the moment, but I would say do a little bit of research. I mean, like Jonathan was saying, Trezor is at the moment what looks pretty good. Again, do a little bit of due diligence on wallets and hot wallets that could be a substitute as well. If you didn't want to buy a kind of like a device like Trezor, but also is another thing that could make your computer in general safer is to buy a YubiKey, which is something that you plug into your computer. It's an extra two-factor authentication, basically. That there are certain things that you select that you won't be able to approve transactions unless that particular device, which is another thing similar to a ledger that you plug into your computer. It's not just for crypto, it's for anything, where you can connect it to your banking or to other things like this. And again, it's something that makes your online life a little bit safer. But yeah, do your due diligence. So say, apart from what we said today, I don't really want to do that for you, because I think everybody here, we all have to take our responsibility in finding things out whenever we use solutions that are alternative to tried and tested solutions out there. Okay. So any last minute questions? Otherwise, we're going to close here in a minute. Anybody? No? All happy? Okay. All right. So, Jonathan, if you don't mind, just post the link again. Remind everybody that there is a session, a Cardano session that Jonathan does every Friday after this. So it's at 9:30. So look at that, 8:30 UTC. Excellent. So that's the problem. If anybody knew what UTC was, so basically it means in UK numbers means 9:30 at the moment. So in about 25 minutes. So you got time to make yourself a cup of tea, use the facilities, and sit down for another session, Jonathan. Okay, so I wish you all a lovely weekend with some quality family time. And I'll see you again next week. Okay. Good night, everyone.